Hello, everyone, and welcome to today's Emerging Market Strategy Update webinar, which is going to focus on Brazil. I'm Eric Anderson, and I'm the head of Emerging Market Investments at Milltrust International, which is a London and Singapore-based asset manager with a core focus on delivering global emerging market solutions to investors. For today, after a very brief introduction from me, we're going to hear from the award-winning Brazilian investment manager, Alaska Asset Management. Alaska is an incredibly successful and highly disciplined boutique Brazilian asset manager headed by Luiz Alves Baez de Barros, who made his fortune by investing in the stock market over the last 50 plus years. Early in his career, he was a partner at star fund manager Luis Stolberger, now known as Credit Suisse Hedging Grifo, a well-known Brazilian asset manager. Barros has assembled a very strong investment team led by Henrique Breda, who's consistently ranked in the top global rankings for Brazilian equities. Alaska have made a name for themselves in Brazil by successfully finding underpriced, discounted companies with high potential investment opportunities. Today, we'll be hearing from Henrique, who is a partner at the firm and whose team is based in Sao Paulo, 9 team members with an average experience of 20 years. We'll have the opportunity to open up to questions after the presentation, and you can ask questions by typing in the chat box in the Zoom panel. We're going to limit to 30 minutes, so if you don't get a chance to all the questions, we'll follow up directly afterwards. And before handing it to Alaska, a quick word on Milltrust. Our approach at Milltrust is to identify leading locally based investment teams in each of the key countries and regions across the emerging markets who are specialists in putting together high conviction portfolios of high quality companies. Each specialist team, which you can see here on the map, manages their regional portfolio within a sub-fund on the Milltrust Emerging Markets platform. These sub-funds form the basis of our global EM strategy. Investors can either invest directly into these sub-funds, such as the Milltrust Alaska Brazil Fund, and build their own exposure to these countries and regions, or invest with the Milltrust Global Emerging Markets Fund, which allocates across the sub-funds of the platform. That's enough for me. Henrique, over to you.
I thank you, Eric. Thank you, everyone. Well, I will try to be very quick here. Well, Brazil's story is similar to Africa and Russia. It's very linked to the commodity story. The similarities are we are coming from a lower levels of commodity prices in the last 10 years, and it's starting to recover very fast. Brazil has a very diversified now types of commodities. So we are now very important in the oil market. We weren't in the last 15 years. So agriculture is famous. So corn, soy. We are very strong in the metals, mainly iron ore, pulp, market leader. Now, because of the pre-salt, we are strong in oil as well. So we don't know which commodity will be the next star, but it doesn't matter. We think as long as the global GDP recovers, but not only a recovery, but with with less noise, because since 2010, with the mass political issues in North Africa, and then Brazil in 2012, 2013, and then we had the second term of Dilma Rousseff in Brazil, and then we had the Trump election, the trade war. So the world has been with a little noise and uncertainty for so long. And after Biden election, it might be a coincidence, but after the U.S. election, we start to see a recovery in the confidence in the main economies, and this is it's very positive for commodities. The companies in the last 10 to 15 years, they have been losing money and passing through a very difficult time. So there was tons of capex in 2007, 2008, 2009. This leads after 2011, 2012 to a oversupply combined with a economy that was not growing so fast in average in the world. So we are facing right now a lower level of uncertainties after the pandemic, and with some constraints of supplies. So the commodity story, which is driving many countries, we think it's sustainable. We don't see any major factor that would make oil price or iron ore collapses. It might be strong for the short term, but we don't see any reason to make those prices collapse. The stronger factor over history that could make commodity prices collapses is oversupply. And we don't see in any major company any major new project being announced or any major capex being implemented. So we think supply will be restricted. And there's a issue that we are not sure yet, but we think that the ESG policies might add some even more supply constraints that would put some pressure in the future in the commodity prices. But one thing that we think is different from other countries, which is specific for Brazil, is that our depression was very aggressive in 2015, 2016. The recovery was very timid in 2017, 18, and 19. And then we had the pandemic in 2020. So we have more or less 5 to 6% of GDP to reach our pre-depression levels that started in 2014. So the recovery of our GDP will be easier in the next years because well the companies are already invested, so there's a lot of idle capacity that are being addressed. So the companies are rising their sales, are rising their profits with no necessity of new capital. So this for the shareholders are very nice. So as long as we see those commodity prices recovering with no necessity of new capex, the companies are offering a very interest pointing to invest. We have never seen such a nice combination of low multiples uh, with a sustainable price and no necessity of capex. So, for example, Vale and Petrobras, they are both around 3 times EBITDA. So this is not usual. So most of the times they are already 8 or 10 times. So you could triple your multiple, but the EBITDA right now are not being, let's say, they are not using the EBITDA to do capex. So it's all free money, all free cash flow. So uh, why why the multiples are so low in Brazil? Uh, the main reason is most of the market, I know most of the investors we talk, they don't believe that the oil price, the iron ore, pulp price are sustainable at those levels. So they could collapse for any reason, third wave of COVID, or I don't know, people are very conservative, uh, but we think it's sustainable. So people are think that the 2 times, 3 times the EBITDA of those companies are in fact double of that because the price will divide it by two in the next 1 or 2 years. So we don't think it will happen. So and this leads us to two type of companies that we have in the portfolio. We have the companies that are showing a very strong set of results, but the market thinks it will collapse, and we don't think so. We think that these strong results will last for longer. So there's an opportunity. And the other type of company is the ones that are showing weak results. The market thinks it will last longer, these weak results, and we are seeing already a recovery. So this is the case of Cogna, local education player, and the shopping malls. One thing that we think it's important to let our investors know is that we are very active in the company. So we are participating in the board of directors of Marco Polo, Allianz, Valid, Yoshp, Cogna, and Banco Alpha. So it's a bus manufacturer, it's a shopping mall, it's a service company that is participating in the banking sector with the government issuing documents. We are in the board of directors of Yoshp, which is the largest wheel producer. And it's nice to see that this first quarter was the best first quarter ever of Yoshp. Uh, and they got it wrong. The results came 40% higher than the budget. And I myself, I'm in the board, and I ask, Why you got so wrong? You had the budget in December, and the first quarter it came 40% higher. Okay, it was higher than expected. That's nice, but why? Where is the thing that you didn't see? And the reason was Brazil. Brazil came much stronger than they were expecting. They have operations in Africa, in United States, in Mexico, in China, in Turkey, and Brazil is the country that is surprising the most. So, well, that's nice. And we are in the board of director of Cogna, which is the largest education player in Brazil. We are also in the fiscal council. We are in the fiscal council of Magazine Luiza that gives us an overview of the retail market in Brazil. And the thing is very clear for us. Each company in in different sectors, they are facing the same surprises, the same issues, which is month by month the recovery is faster than the expected. This expected, it's an issue here in Brazil. I'm not sure in the other countries, but this expectation is driven by the media, most of the media, and they are very pessimistic about Brazilian government. So it's the main opposition of the government. So the news are very pessimistic, and this leads the market, which follows only the media, to be blind. So we try to keep very close to the companies because the economy is happening there. So we are the largest shareholder of Login, which is a coastal transportation company with a lot of ships, and we are seeing that there's no space available for new containers, so they are rising prices. So how this can be possible? If you see that 4 years ago they had an idle ship, now this ship is full. They bought already two more ships and they are already full again. So this leads us to conclude by seeing the shopping malls, the commodity companies, the service companies, that the recovery is sustainable and very strong. This has a little to do with the politics in Brazil. This is the recovery of our economy is very tied to global emerging markets recovery. And one uh, one chart I would like to show, and this is very strong show where we are here in Brazil. This is the Ibovespa in US dollar terms since 1965. So this cycle is very clear. It's cycles of boom and bust of 6 to 7 years. The bull market in Brazil is very strong. So as the bear market as well. This tendency is around 11% per year on average, but with high volatility. So from 65 to 71, it was 29 times in US dollar terms. From 1983 to 86, 15 times. From 91 to 97, our strongest bull market in the history was 40 times in US dollar terms. Sorry, 34 times. Here, from 2002 to 2008 was the Lula boom, which in fact was the last commodity boom. This was 20 times in US dollar terms. And now we are approaching 3 times. We think we have all the factors that could make us in the next 5 to 7 years to reach uh, these levels that no one no one believes, but we think we will reach there. And of course, this is a combination of our Ibovespa in local currency appreciation and our local currency appreciation. If we see that, let me see if here, our currency here, we are showing two graphs. The blue line is the overvaluation or undervaluation of our currency measured by the BIS, the Bank of Basel. This is our currency compared to other major currencies, emerging market currencies, developed country currencies, weighted by our trade. So if we trade a lot with China or US or Argentina, this leads to higher weight to compare our currency to other ones. So when we see that our currency here in the blue line is at levels only seen in the Lula election in 2002, which is a very undervaluated level. Uh, if we reach a normal level, and this doesn't need to be this overvaluation here of 2011 when emerging market currencies were very expensive and the US dollar was in the low cycle. But if we reach a normal level, we could see 20 to 30% appreciation on our currency in the next 2 to 3 years. And this is very important to this Ibovespa cycle in US dollar terms. Um, I would like to give space for Q&A for to talk about some companies. Eric, how do you want to continue? This is just an overview of what we are seeing.
Yeah, Enrique, I think it's worth maybe talking about a few more of your companies, the high conviction companies. I think you addressed a lot of the
Okay.
common questions, but go
Mhm.
ahead, carry on some of your high conviction ideas.
Okay. Well, there's some charts here about our COVID and the vaccination. It's all going well. We are recovering a lot. So the first dose, the moving average is accelerating. So this is leading to a recovery on our activity. The company would like to talk first one is Cogna, which is different from the commodity sector. This is the type of company that has weak results right now. The market thinks that this will not recover, but we are seeing the recovery. So we think that the worst is behind us in 2020. Cogna was a very successful company in from 2007 to 2016, and they were surfing a lot our GDP that was very strong, and the FIES, which is a public financial to poor students. Once the government start to face some problems with the fiscal budget and the fiscal results, and then we changed from Dilma Rousseff to Temer in 2016. This FIES, which was over over financial to poor students, that they have political incentives to do that. When the government withdraw or cancel this financial to poor students, we start to see some difficulties in Cogna. We weren't a shareholder of the company. We were just looking, analyzing for so many years. And then the stock price was around 20 reais, and they start to face some problems. They have oversized campus because of a old reality. Once you have fewer students, those campus start to be deficitary, or they start to lose money. And then we start to see in so many sectors, in the financial sector, for example, with XP, in the retail sector, with Magazine, Alibaba in China, we start to see those platform new way of doing business. So you set up a platform, you put some sellers, you have a very completed set of services, and as you have a lot of users or clients, you start to benefit from this environment where you offered a lot of services. You can attract a lot of sellers, and this leads to a winning cycle. And this was very successful in a lot of sectors, but in the education sector, mainly here in Brazil, we didn't see that. The companies were very old-fashioned. And in 2007, Cogna took the decision to set up the best platform for schools, students, and sellers here in Brazil. So they need to change from an old approach with campuses, students going local, to a new logical way of doing business, which is more online, distance learning, and with new system of education to sell to schools, which is asset light. So they had a turnaround in 2018, 2019. They were preparing for a good 2020, and then we had the pandemic, which leads to more difficulties in the company. But after 2020, when the share price from 2017 to 2020 collapsing from 20 to almost 3 reais, from 2020 on, we start to see a very strong recovery in the results. The company has guidance which is public, but we know that the non-public guidance is much higher than that. The guidance is for grow. It's that they will grow the EBITDA from 1 billion reais in 2020, it was last year, to 2.4 billion reais in 2024. We have a higher number than that. And the free cash flow was, even 2020, a very difficult year. The free cash flow to equity was 230 million reais, and they are saying us that publicly, that they will reach 1 billion reais in 2024. But this is not considering the platform business when they are aggregating a lot of sellers. So we have almost 3 billion reais for 2024. But after 4 years growing, or 16 quarters, we don't think that the market will start to doubt the capacity to recover results. So imagine for 16 quarters of EBITDA growth or recovery in the bottom line. So we think that the multiple of this company could be re-rated. Uh, if just to do some calculations, we have a more complex model here, but just to just to simplify, imagine that this company is trading at 15 times EBITDA, which for an asset light company that is growing 20% per year is it is easy. No, it's not so difficult. 15 times EBITDA, 15 times uh, 2.4 billion reais, 15 times 2.4, you have 36 billion reais of EV. Uh, the net debt of this company will collapse a lot in the next few years, but let's consider 5 billion reais. So you have a 31 billion reais of market cap. Well, right now the company is at around 8 or 9 billion reais. So you have more than 3 times uh, in a very conservative scenario for the next 4 years. So for us, is it's okay, it's good. We can have an investment in a potential like that, but we have Eduardo Mestieri in the fiscal council, and Angela is on the board of directors. So we are in touch intensely with the company to see if everything that we are imagining is happening. And for long as we are there, everything is in place. And there is some good optionalities that we think it might happen. So this could be higher. So this is the company that is different from the commodity stories. Most of the large investments are linked to commodity stories. Petrobras, low multiple. We think the oil is sustainable at those levels. Vale, Suzano, Klabin, Braskem. The other story that is not directly linked to commodities, but is in a way linked, is Rumo. It's a railway company, and they are very well managed. They are connecting all the Brazilian agriculture to the world demand. Brazil, with our infrastructure minister working 24 hours a day, 7 days a week, he's very focused on making new concessions, facilitating private capital to invest, and this is leading to a new set of internal rate of returns for the private companies in the new project. So Rumo is the largest one. They have tons of capital to invest. They are generating a lot of capital. We were in the board of directors for 3 years. We asked to get out. As Rumo is very important for the portfolio. We already know everything we need to go. We need to know about the owners, the executives, but participating in the board of directors for some companies, the restriction to trade is very intense, and Rumo is one of those companies. Once you are there, most of the year you cannot trade any share, and this is not good for us because we would like to add new positions if the share price collapse, or we want to sell some Porsche, some part of our positions if the share price goes up, and we trade a lot. So for us, being there for so many years was enough, and we got out. But we are very close to the guys there. And Rumo, we think it will grow for so many years, because if you look at if you look at the countries, the major agriculture producers in the world, mainly United States and Argentina, they don't have new land to produce, or to produce soy or corn. Everything is there. Brazil has new land, but don't have new railway. So the problem with Brazil is the infrastructure, is not land to increase production. So once Rumo start to go further into Brazilian territory, new land could be used to produce more sugar, soybean, corn. So Rumo is fundamental to increase the agricultural production here in Brazil, the soy and everything you might see. So Rumo for us is not directly a commodity company, but it's totally linked to commodity company. Uh, One thing that Rumo has that is very good, it's a very strong advantage, is that Brazil is yet very dependent to the trucks, the transportation through trucks, and this is expensive. Um, every now and then you can see some strikes of the truckers. And the government is very concerned to facilitate the growth of Rumo and Login, for example, which is the coastal transportation company, in order to uh, get free from those pressure of the truckers and the transportation through roads. So the government is helping a lot of Rumo. So these two companies, Cogna and Rumo, are the largest ones that are not commodity producers, and we think is very, very good for us here. And we are investing in Rumo since 2016, and we see a lot of space to continue to grow revenues, profitability. And the other company that it's a little bit tied to commodity, but is linked to Rumo and is very important for us, is Cosan. Cosan is the main shareholder of Rumo. Cosan is becoming probably one of the main holdings companies in Brazil. They have participation in Rumo, the large shareholder, almost 30%. They have a gas distribution company, which was the former Congas that we sold to Cosan here in Alaska, and they are increasing investments there. And Cosan is the owner of Raízen, which is becoming the main fuel distribution and sugar operator here in Brazil. So Cosan is one of our largest positions. Well, Eric, I'm concerned about the time. So
Yeah, no, we'll do maybe one, maybe two questions. One question here, you mentioned about agriculture, and this question came in about the impact of the drought in Brazil on exports, on industrial production like hydropower, et cetera, et cetera. I mean, it's in the news we see over here. What are you seeing on your side? What impact has it had on those areas?
well, this is endemic issue here in Brazil. Every year we see some month that people are concerned about the drought. Um, we are talking to the companies, and it's not a major issue here. So some areas we can see some problems in the production, but it's very diversified. So in the territory, you can see production from the south of Brazil, Rio Grande do Sul, until northeast. Um, our electricity infrastructure is increasing, is getting better with time. So we now have the former uh, MPX, which now is Eneva in the northeast of Brazil, using a lot of gas as a source of energy. We have a lot of wind power right now, and the solar panels are increasing. So, well, this is always a issue. Our source of energy is diversifying a lot, and but talking to those companies, it's not a major concern, and is not even in the table as a thing that, well, this could make us very worried, or this could be very bad for us this year. So it's not a issue. The main issue here in Brazil is always political. Well, the government will start to cooperate, or will make things difficult. This is the issue that could change a lot of things. So I don't know if the guys remember in 2012 when Dilma Rousseff changed a lot the logical of energy prices. This leads to uh, capex revisions, and the prices changed a lot. So when the government starts to mess with the logical of doing business, or changing or difficulty in concessions, this could make the commodity producers, the agriculture players, very worried. And this is not on the table. And we see that after the end of 2015 and beginning of 2016, the mindset of the government, with Temer and then Henrique Meirelles as financial minister, and this is continuing with this government, and we think it will continue with the next government, because the mindset, the demand of the society is more free market and less government. We think as long this is in place, the main issues of doing business in Brazil are very diminished, and the other things related to weather or prices is just circumstantial, is temporary, is not a major worry.
Okay. Okay, Enrique. Well, I think we'll finish there. That was an excellent presentation. Thanks everyone for joining the call. As a reminder, the Brazilian strategy run by Alaska is available on the Milltrust Emerging Markets platform, which you can access directly through the Milltrust Alaska Brazil Fund or through our global funds. My team will be circulating a replay after the call in the next few days. So in the meantime, any questions, don't hesitate to get in touch. And with that, I think we'll end the call. Enrique, thanks for your time, and we'll be in touch. Thanks, everyone.
Thank you, Eric. Any further question related to the presentation, just send to us and we reply.
Perfect.
Thank you.
Thank you.